This is Matthew Cratter from Trader University, and today I want to talk about one of my favorite long-term trend indicators. If you're interested in learning how to make money in both bull and bear markets, or you just want to see what I'm trading or investing in, be sure to hit that subscribe button. So let me show you how to set up this indicator. I'm actually going to include a link in the description notes below. This is a TradingView chart. I have weekly bars here. We can see up here in the drop down I've selected 1 week. I don't pay any attention to these numbers in the lower left-hand corner. Sometimes those confuse people. I've just dropped in the ticker QQQ, and then I've added a moving average. And this is a weekly moving average because each bar is a 1 week bar. And I've set the weekly moving average to 200. Again, you should be able to just click on the description notes below on the link, the TradingView link, and get this. And I'm going to show you how to change the ticker. Basically, you can go up here in the upper right-hand corner and type in whatever ticker you're interested in. I will use Facebook here, FB. I'll hit enter, and it adds it to my watch list here. And then what I can do, if I want to populate the chart, I just double click right here and it populates it. Now what I'm able to do, I have a paid subscription. I'm not sure if this works for free subscriptions, is I can just click anywhere in the chart and then type in a ticker and it will change it. So you can try each of those methods and see which one works best for you. Now let me show you how this works. This is a very good indicator for long-term trading, also known as investing, and it gives you an idea of where the underlying trend is. Obviously, stock market's been going up pretty steadily since the great bear market, the great financial crisis of 2008 to 2009. But this really shows how the 200-week moving average has acted as a really nice support level. So once we started trading above it, in 2010, early 2010, we've really never looked back. And if we scroll in here, we can see that we've come close to the moving average. For example, in the big sell-off in March, we came quite close, but we never traded below it. Now we're quite extended. One can do sort of extensive candlestick analysis. I've talked a lot about this weekly spinning top that we got right here, which marked a reversal sign. Now, if we get some good fiscal stimulus from Congress, or if the Fed really starts printing again, then we could see another big bump up. This was sort of the Fed injecting liquidity, and we got this huge melt up. This, of course, was the COVID crisis, kind of the liquidity crisis caused by the COVID. And so now a lot of this really is going to depend on fiscal policy, but this at least ensures that you're always trading with the trend, and you're not trying to fight the trend. And we can look at individual stocks as well. Let's look at Amazon, for example. You can see Amazon has really, especially in the last 3 or 4 years, has really pulled away from the moving average as well, has really melted up. And then there are other stocks like Facebook, for example, FB, which have actually traded below this and then bounced off, and it's been a fairly good point to bounce off. But these are stocks that are a little less strong because the fact that they're actually able to spend a couple weeks and even close below the 200-day moving average shows that they might not be quite as strong. Google would be another example of another FANG stock, which a little better than Facebook in terms of the 200-week moving average as support. And then you can also you can compare different ETFs or different baskets of stocks. So we looked at the QQQ, which is the NASDAQ 100. Here we have the S&P 500, and as we would expect, it sold off a little more hard than the QQQs during the big COVID mess. And it was able to bounce back, but obviously it had a lot more real-world constraints. It wasn't just a lot of software companies, but you had things like airline and travel companies and these sort of things that were hit really badly, sort of more old economy companies. So this is a very nice way of just getting an idea of where the trend might be. Let's look at something like ExxonMobil, and you can see that if you're trading something like ExxonMobil, this may lead you to believe that there's been something fundamentally changed with the company or with crude oil or something like that. And so when you see a 200-week moving average chart where the stock is constantly selling off every time it gets above it, then this might be, it might still be a good dividend investment stock. or it might not be. Price action really does tell you a lot. Finally, I wanted to apply this to Bitcoin. I think you can learn a lot by looking at the 200-week moving average for Bitcoin. Here's the big picture, and what we see happening is during the big halvings, you get a big pull away from the 200-week moving average. So we had kind of a bubble in Bitcoin where it got ahead of its fundamentals in 2017. It got very, very far away from the 200-week moving average, and then it mean reverted back down to it. This was the very painful bear market in crypto from 2018, beginning of 2018, through the end really of 2000, through the end, or I'd say actually more the beginning of 2019. And but the interesting thing about this is if we look at this blue line, which is of course the 200-week moving average, we can get an idea of really how much Bitcoin goes up every month. So what I've done in this table is I've looked at the price of the 200-day moving average at the end of each month approximately. So at the end of January 2020, at the end of February, at the end of March, etc. And then I've looked at the delta between those 2 months. In other words, what was the slope of the 200-week moving average? How much does it go up every month? And these are really denominated in dollars. And so we can see that before the halving, it was going up about, call it $100, $150 a month. Since the May 2020 halving, which is normally initiates a very bullish phase for Bitcoin, we can see that it has gone up. More. So the halving happened in May, and if we take an average of these four prices here, these four deltas, we can see that Bitcoin has increased about $211 per month, or I should say, the 200-week moving average. The slope of it is about the increase is about $211 per month. Now, if we look at that as an increase, as sort of a delta on the price where Bitcoin's currently trading at 10,644, we just say $211 divided by 10,644. We can see that Bitcoin goes up about 2% a month using this measurement. If we use it, the delta based on the actual moving average number. So, for example, the moving average right now is the 200-week moving average is at approximately 6,719. We can see that it goes up about 3% a month, compounding on itself off of the 200-week moving average. As we said, the 200-week moving average serves as very good support. What happened in March was really quite tremendous, but we can see that it really, even though we traded below it during the month, we closed right around the 200-week moving average. And so when people ask me how low could Bitcoin go if there's a lot of market volatility in the stock market surrounding the 2020 election, I've been using this number 6,700. I just wanted to show you guys where I got it from. It's really the 200-week moving average. We could certainly see a retracement back to 6,700, somewhere around that. But the people who are waiting with their limit orders at 3 or 4 or 5,000, I don't think we get down that low. Obviously, this is 2020 and this is Bitcoin, so anything can happen. But what I see happening is that we actually initiate something that's much more like what happened in 2017, where once we break out of this trading zone here, we are going to see new all-time highs in Bitcoin. And what will happen is that the price of Bitcoin will again pull away from the 200-week moving average quite sharply. This is how we easily see something like 100,000 on Bitcoin. I know that sounds crazy, but you can check out my other videos on Bitcoin, which I'll link to below in terms of the Plan B stock to flow pricing model. But one thing that you can take comfort in, and I take comfort in when I'm holding Bitcoin, is I keep an eye on this 200-week moving average, and I see it just gently sloping up and raising that floor for Bitcoin. Now there may be a fundamental reason for this. I wouldn't be surprised if you did the analysis that sort of the marginal cost of production. So the cost to produce each marginal Bitcoin is somewhere around this 200-week moving average. It's hard to get numbers for where the cost of production is. I've seen numbers that are just all over. But this would make sense. Bitcoin becomes more difficult to mine over time. The cost of production goes up, and this sort of floor on Bitcoin rises at the same time. The 200-week moving average rises at the same time. If you found this video helpful and this is the kind of thing you like to learn and you like my teaching style, I'd encourage you to check out my online courses. You can get unlimited access to all of my courses for 30 days for one low price. And I cover cryptocurrencies, I cover momentum stocks, day trading, swing trading. My flagship course really that will take you from being a beginner to being a professional trader is Learn to Trade Stocks Like a Pro. You can click on any of these boxes and you'll see the curriculum where I cover moving averages and Bollinger Bands, candlestick trading. Or if you want something a little more advanced, you should check out my Momentum Stock Secrets course, which I just finished a couple weeks ago, that really does a really deep dive in these kind of momentum stocks that can have such high potential returns. So if this is something that interests you, click on the description notes below. It'll take you to this join page and you can click on any of these boxes. You can see the list of all the courses: Make Money with IPOs, Learn to Trade Futures Like a Pro, Swing Trading with Options. I have a course here where you can follow and watch what I'm investing in the crypto space. And if this is something that interests you, you can scroll all the way down to the bottom, click Get It Now, and it'll take you to this checkout page. Now, normally access for 30 days is just $125. But I want to give you a special coupon. If you scroll down and click right here where it says have a coupon code and you type in YT99, click update, and that'll take $26 off. So you'll get access to all 13 courses for just $99 for 30 days. There are no long-term contracts or anything like that, so you can watch all the courses and then cancel, or you can remain a subscriber as I'm continually updating and adding lectures and new courses, as well as my new investments in crypto. Appreciate you watching this. If you found this video helpful, be sure to hit that subscribe and like button and hit the notification bell as well, so you'll be notified when I post my next video on YouTube. And let me know your questions and comments in the comment section below. Thanks a lot for listening, and I'll see you in the next video.